Welcome to TradeTheNBI.com. This is Jonas Reports for the 21st. Well, continuation. I mean, we have magenta under yellow, which is cell configuration. We had the DOC spread right here, which started the more extreme decline. And what we've been seeing is the breakdown of the shakeout and the inability of it to move back above zero. Once it started its way up, I even had talked about that. Once it starts that tick up, it's got to make it back to the positive. If it doesn't, you get this, which is a much steeper slide, not able to hold the supports. But correspondingly, with that rising 0%, the move towards the 0% is one of those things that we look at. Now, what I did draw here, just for benefit purposes, as we talk about positive extremes, we've had others that began right about here and then moved up. We had the slight fill of that first one, but the beginning breakout of this move that started in June, and even if you go back to the one that was earlier in April, and that didn't have the positive extremes that needed to be refilled. But that 4274, that would be the logical location for algos to want to move to, because that's where it all began. So that's how that typically works, and it's just a matter of waiting for the appropriate sell signal to get into it. And that literally occurred up here. Could have started out at this one, but turned around really fast with the magenta moving back above. Not the case here. That also took place when we saw that there was a deep retracement of the steel, which is the short-term buyers. So they were fully reset to pop off and push this move up again. Not so much now. The orange has moved outside of the cyan red, but it won't take much for it to move right back in, and that still would be continuation. And we're not seeing any turnaround yet from DOC, or even just a slight move of the NBI magenta. But we're done at two. You gotta have, that's got to be above 9, at least 5 to have some semblance of support. So for now, 23% from the Morganacci reading is where we're at this particular stage, and that leaves quite a bit of room to get down to that. So you'd have to have pretty significant. So the likelihood is you get some back and forth, but we are dipped below the extreme with the red line there. So there's still plenty of sell impetus, if you want to view it in that term. Still exists. We're below the 23 on the NASDAQ. So with white NBI leading on that one much stronger, the likelihood of playing back and forth in between there, it's probably not likely to break the zero. Any of these are at this particular stage, with the magenta wear being slightly above, but it's still not showing anybody real excited about buying at this particular stage. And this was just that cumulative effect. Really began with the bond recognition of bond traders that rates were not going to change and that they were only going to get higher. And all these people were buying over here and getting much lower yields, or way underwater from what they are now. Has it moved too far? Yeah, I think so. It needs to move up right around that 95 range would be a little bit more reasonable. But you get overdrafts either direction, to the upside and to the downside, and that happens. But it definitely is below that 100 level, which is really what I was looking for, and I figured somewhere around 97-ish they would support range there. But as long as oil continues to rise, that could grow much lower, and you could get a trade off of that, where their expectation is that rising inflation is going to force the Fed to become even more strident. I don't know that the Fed really needs to do a whole lot. You don't have to push that inflation down immediately just by keeping rates elevated like that. You draw money from the markets because of the higher yield, helps fund some of your deficit, not nearly enough to justify the situation. But needless to say, with oil where it is over the 80 range, it's problematic, because it's just going to put upward pressure on a lot of different things. And again, the most important one we look at is wages, and then you look at job creation. And now I can't really trust unemployment and those things anymore. Just those numbers have been so brutalized; they're not even valuable, except for those that trade off of them. And it just gives people an excuse to make a move one way or another. But they're not wholly reliable from the euro standpoint. Still way overvalued, but within the range. As long as it remains within that 106, 111 range, they're comfortable with that. When it spiked out a little bit in July there, off no real value as to why it would do that, simply because of some jawboning. But anything the ECB does is still way behind where the Fed is, and without the Fed, the ECB is nothing. And also, you throw in the fact that the EU is not faring too well under the whole Russia situation. And as winter starts to come, it's going to be really interesting because fuel costs in that Nord Stream 2 is gone. Now you have the problems in Niger, so that pipeline's not getting anywhere. And Farmer's Almanac predicting, extreme cold, or at least much more severe cold winter in the north. That will draw supplies from export. So it could be interesting in a month or so. Gold still unable to catch a bid, and I think they just really want to keep that driven down. That's pretty extreme for gold, given what we're seeing too with a lot of the outside concerns taking place in the world. It's a strange move at this particular stage. Hasn't changed yet. We may start to see a bounce back at this particular stage, but still not above NBI white. And as long as that orange between cyan and red continuation zone, so is what it is. The other carnage in Bitcoin that never really saw it as much of a carnage, because this was the positive extreme at the 27K that needed to get filled and finally got filled. So where's the shock in that? Well, to everybody who doesn't think that that's how things work, but now caught between 0 and 100%, still within weakness with that clean NBI lead. All good from that standpoint. It was an easy call, and certainly will present some opportunities for discount once it's done, but also a great opportunity to short. That's the beauty of having it in futures, which is exactly why they created the futures on them in the first place. ETH broke down to new lows and then filled back up in there because it had a much weaker signaling, and it was just a matter of those breakdowns, really that stagnation that lasted all the way through July after that fake news BlackRock pump from before, as well as the court case that really resolved absolutely zero. And it's still problematic. And it really lends itself towards the argument of government digital currencies, because everybody knows that's where you would first go, is to banning all the other ones and their legality. So from a 50K ES, we stayed below the 23. We brought ourselves back above it briefly, and that created some nice short cover impetus run, but it really just, again, no buyers once that short cover takes place. And critical will be this hold above the 23%. Not looking great current reading, but not a huge amount of new short activity yet. But we're meeting with cyan and green here on the DSC. A rejection with cyan moving above certainly would call the 0% back in place down at the 43.50 range. So be on the lookout for that. To the upside, 50% range is going to be the upside ceiling. So from the early morning action, there was selling, and then as soon as market was about to open up, pre-market fought it off, shot back up, and held up fairly decent through that. But towards the end of the day, a little bit late day sell-off, and we'll see if that continues. Nothing from a intraday positive extreme or anything like that to get worked up about. So we just got some pretty good ranges and excellent volatility. All of that really good stuff, and continue to look for a broader trend in the economy at this particular stage, with things just back and forth. It's difficult, but it's not crisis level. So from that standpoint, the market is still extremely well valued given the potentials. So there's much bigger room to the downside than to the upside. I think that's the easiest way to describe it at this particular stage, given where things are. So keep that one in mind. As always, though, look for me on the Skype chat. Trade well.